Hi, welcome to another stock review video here on Macroeconomic. Today we're going to be going through a wide range of companies. So this is not just going to be one single stock review. We're going to be talking about a few companies that we thought, did really well throughout the year, and maybe some companies that didn't do as well as they could have, and we'll talk about why. I'm joined today by Clive Charlton from JMB. He's an equity trader. As you know, JMB sponsors our stock reviews. So, very happy to have him here to join us to give his perspective as well. So as usual, get comfortable, feel free to let us know where you're joining from in the chat. And if it's your first time here, I'll share a little bit more about what we do later on in the video.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn Grow Invest.
All right, welcome back. Let us pray. Thank you, Lord, for this day. Thank you for the ability to produce wealth. We pray, Lord, for wisdom, knowledge, and understanding to be able to make wise investment decisions. We thank you, Lord, in Jesus' name. Amen. All right, everyone, welcome. It's been a few weeks since I've seen you. Hope you're all doing well. Hopefully, you'd have checked out our Grow Your Wealth conference, which took place a few weeks ago. If you did not catch that video, or that conference rather, be sure to catch the replay. If you registered, the link would have been sent to your email. And if you're a member of our mailing list, that link would have been sent to you as well. If you didn't do either, you can still sign up for our mailing list. The link will be in the description, I think shortly after this video airs. And feel free to just reach out to us on any platform for that link. All right, so I'll invite Clive to join me here on screen, and then I'll talk about the format for this video. So Clive, welcome.
Thanks for having me. I'm very happy to be here.
Happy to have you as well. So what we typically do for our stock reviews would be to go to identify one company. We'll talk about the history of the company, the performance, any dividend announcements, and any upcoming news. We're not going to be able to do all of that because what we're trying to do is go through at least a few companies from the junior market, a few companies from the main market. What we're trying to do is kind of give a good overview of what would have taken place for this year. So what we'll do is we'll identify a company. So I'll share one from my side, Clive will share one from the JMB perspective, and we'll just talk about it for a little bit, see if we can maybe identify what would have led to its performance for the year. We'll be taking your questions as we go as well first. So feel free to post those in the chat as we go along. This is going to be a free-flowing conversation. So let's get started, Clive. As what we typically say or talk about once we have a guest is, talk about maybe, I'll ask you to share your personal perspective as to what you look for in terms of the market. So you are an equity trader at JMB. So what is it that you would be looking for, at least at a high level, right? So we're not talking about any specific companies, but what are the things you are personally looking for?
Okay, yes. Well, interestingly, the macroeconomy is important, right? What is the macroeconomy? There are different levels. The macroeconomy is largely influenced significantly by government actions. And of course, there's a separated entity called the Bank of Jamaica, over the development of economies over time, they have separated responsibilities, right? And as economy become more complex, as we move away from what we call the agrarian sector, which is, we plant, we produce to eat, and we produce to get shelter. And we move away from that into the more sophisticated economy. We're now providing services. And then we step up another a few, call it rung up the ladder. With financial services, then we have to separate the functions, within the economy, who manages and regulates and have oversight over what area. And so we have the BOJ, the Bank of Jamaica, which controls what we call the money supply. Money over time we'll kind of understand on a deeper level what money plays. Yeah, it's buy and sell, but money moving around the thing create around people, among people, the economy creates new opportunities, and these opportunities can have good effect and adverse effect. So it has to be properly managed. That's what is happening now with BOJ. So that is properly managed, once BOJ has a good hand on what potentially may cause a problem, they're not reacting. BOJ has been proactive, and it puts a little spoke in the wheel of the economy, but it's necessary in order to get a handle on what may happen in the future, and BOJ is doing that. So
Okay.
once they can do that comfortably, then I believe that can provide the basis for the economy to the well. And so far, from what we have seen, I think some of the results that were expected is what we're experiencing now, based on some of the figures released by Statin and PIOJ. These two entities collect information and data, right? And of course, PIOJ goes further. It gives prescriptions as to how government may move, how different units, agencies in the economy may move, or what they may do to kind of give some impetus to the economy. So far, once we have macroeconomic stability, right now, monetary stability, containing inflation, or containing the drastic move in inflation. And so far, BOJ is doing a fairly good job. So if they continue to do that well, I expect that by next year, and based on many pundits, what other experts in the areas are saying, that they expect that the economy should go through stability and then some level of recovery next year. Not just Jamaica, but the global economy.
So what I'll do, thank you for sharing that. What I'll ask you to do there is translate that for the investors watching now.
Okay.
What should they be looking for,
Yes.
or what are you looking for? Because
Yes.
we've heard talks as well. We've had other guests on our show speak about their outlook for the next 6 to 12 months, for example.
Yes.
What should us as investors be looking for, or how should we be? Is it the same process for us in terms of selecting companies like we normally would have?
Okay, great. Now, interestingly, some of these areas are quite complex. I'm sure how BOJ collects information, how Statin collects information, how they crunch these numbers. Sometimes it's out of our purview, including mine, right? I get the data from them, get the information, and then I see how best it suits my purpose, which is getting value to the market. That's good. So I can perfectly understood. Now, what BOJ publishes is the inflation rate. I think, yes, BOJ gives us that, but it is really published and accumulated by Statin. Statin collects the data. So Statin goes around and looks at how food prices are going, how energy prices going, and they subdivide various sectors. They might subdivide it further into animal foods versus vegetables versus produced food, starch versus protein. Of course, they go higher. There's also energy. So if the prices of some of them are not within our control, for example, energy, oil, we import oil. Also, there's quite a few where we're heavily dependent on imports. I mean, just look around the office, your desk, your home. Quite a few things are imported. We need hard currency, US dollar, to do that. So if inflation is contained on the global scale, especially with our larger trading partner, then it means that inflation here, domestic inflation, might be contained. And inflation affects our livelihood. Our light bill goes up, our food goes up. Same thing with the companies that are listed on the stock exchange. Their cost goes up too. You see, we know that quite a few workers are now agitating for increased pay. That's a big part of the cost structure of a company. Right? We know that as interest rate goes up, other areas, import goods, raw materials, etc., goes up. We know that for financial institution, as interest, we like to see that larger figure of interest on our bank book. When we go monthly, our statement, I will say that. But what it means, high interest rate means that the bank is paying us a higher interest rate. But it means then that the person who borrows that money from the bank for productive activity is also paying even a higher interest rate.
Yeah.
So therefore, that is how interest rate affects productivity and affects consumption. First and foremost, we want to create jobs and continue to create jobs. We want to employ people. We want companies, by containing costs somewhat, have more room to grow revenue. That is where the company makes profit. That's what drives the value of the company. So we want that to happen. So it's good to have inflation contained. It's good to have interest rate a little lower. But for the time being, BOJ saw it fit to increase interest rate, the base rate at least. There are different type of various entities will add their margin to that, when they lend or borrow, right? So we
Yeah.
want to contain interest rate. We want to contain inflation so we can keep cost stable, not necessarily down as in decline, but stable, predictable, so we can make plans. Imagine, I think many Jamaicans see this. Property, as property is being developed, and many times they'll tell you, 100,000, 1 bedroom, 2 bedroom going for 100,000, subject to escalation. Now, the thing with property development, it takes a year or two to complete from beginning to completion. As a matter of fact, when you envision this property, then you have to get capital, then you have to go through the approval process. And then when you start production, that is, you start to dig into the earth, to the completion of that, furnish, light, people moving in, etc. That's probably a year and a half. During that time, anything can happen. So many times it's subject to escalation. If we have an environment where inflation is continuously going up, it means that that's subject to escalation. When you make your deposit on that apartment, house, or property, by the time 2 years when it's handed over to you, you're probably paying 20% more. The developer say, I have to charge you 20% more. We don't want that. So we need to contain inflation, right?
Okay, so what you're saying, or at least what I'm getting from what you're saying, and persons here can let me know if they agree. We need to be looking out for how companies are able to manage their costs. For those who are in the financial services, look to see in terms of their streams of income, how those are trending at least over the next few quarters, and just understand and appreciate that overall prices are going up. So the different admin and general expenses and so on may start increasing. So the companies who are able to manage that well will be the ones who will likely perform better, at least during the next 12 months.
Exactly. Yes. Certainly.
Okay.
Certainly.
All right, cool. So I mean, it's something that we've been tracking here for a while. We've been, at least from 2020, we've been talking about the companies who would be able to adjust. I know I personally will be sharing the companies I'll be looking out for maybe the next few months, at least closer to when we get on with our different companies. But at least for now, what I see as well is that persons are, well, at least I'm not seeing trading taking place in the same way. And I guess that will kind of come out in our conversation later on.
Yes.
So that is something interesting to watch.
Yes.
I think that persons are not necessarily as patient for returns, meaning it's something that we're not seeing maybe what we would have seen previously, for example, for the last few offers that would have come out on the market.
Exactly.
And just general things, right? So it's interesting. It's an interesting time right now. I do think that those who have a longer term time horizon will definitely do well. Those who are a little bit impatient will have to, I guess, manage a little bit better.
Yeah. Exactly. And what is interesting though, I think since 2014, our stock market has done well. In fact, I think 2014 and I think 2017 or 2017, I believe, we were the top performing market in the world. What that means is the growth of the market, the percentage growth, top performing. And that's good and that's interesting, because I think this is the best the market has been in. Well, I think this is the best the economy has been in perhaps the last 30 plus years. I think they managed to get the grip on the macro side of the economy, that is interest rate and inflation. Once interest rate goes down, then inflation may follow if it is craftily managed. So I think the economy. Anyway, the point I'm raising though is that we have seen, because of this renewed interest in the market and in many companies, we have seen quite a few companies coming public. There's a new reawakening, right? And we have seen tremendous price increase, which is unusual. It is unusual, and some of it is really highly speculative, right? So I think we really ought to readjust to a more longer term horizon. That's one. And longer term doesn't necessarily mean 5, 10, 16 years.
Yeah.
It means that when a stock price moves up and we expect 30, 40, 50% within 4 days, that's exceptionally unusual. Right? And it will not continue.
But I mean, again, I really think that those who are Yeah, we'll talk more about that as I go. So let us kind of quickly, just before we get into the companies, I'll just highlight this episode is sponsored by JMB Moneyline. So what we're going to be doing, let me actually go to the next slide here before we get into the companies. I have to say, anything that is discussed here is for discussion, education, entertainment, and illustrative purposes only, and should not be construed as professional financial advice, solicitation, or recommendation to buy or sell any securities. So what Clive and I will be going through, this is for the education of our Learn Grow Invest community. You should always speak to your financial advisor before you make any investment decision. All right. So with that out the way, Clive, you want to start us off?
Okay, yes. Now, let me state now, and I have to give this preamble, right? Because as an institution, we want people to, one, speak to your advisor.
Yes.
Two, any piece of info. Don't inundate yourself with too much. Too much information can be overpowering, overwhelming. So stick to the simple information. For example, our local newspaper carries quite a lot of information. Read it. Simple. You don't have to get too granular with the information, but have an understanding of what it is saying. If it says that a company has acquired another company, if it says a company has invested some money in some area, kind of just get at what does that mean for the company? It means that revenue will grow. If company lays off, it sounds bad. Yes, true. Persons are laying off, but look behind it. Are they laying off because they are shutting down? Or are they laying off because they are getting leaner? They are containing costs. So try to understand those things, and then you can kind of look at the direction. Right? So in light of that, we say information gathering. Also, these are our research. These are what I'm referring to is what our research team has looked at, right? So these are recommendations of our research. Apart from that, I can give you an idea what I believe is happening in the market and where there are opportunities, not necessarily what our research has produced. Right? And again, the preamble that you just showed, we ask people to take that into consideration, right?
Definitely.
Because I mean, conditions change by the day, by the week with a company and how the market performs. So what we say today may not necessarily hold next week or 2 weeks, right?
Agree.
Good. Exactly. So let's deal with in terms of opportunity. Let me just quickly say that market moves in cycle. All markets, but our stock market also moves in cycle. The observation is that during the summer period, the market is usually very low. Low volume, prices decline. During the summer period, which is that kind of extended, the money that people invest on, money that is pulled out of their pockets. Same way you pull money out of your pocket, that's the same way everybody else pulls money out of their pocket. Even the wealthy, right? They may have a little bit more, but they allocate among different needs and uses also, right? So the same thing that guides their investment cycle is the same thing that guides me and you, the ordinary working class persons. So during the summer period, prices are usually low and tempered as people try to get cash to satisfy holidays, children coming home, and different other activities. During the leading up to the end of the year, many companies, their year end are December, right? 9 months to a year. Usually the market volume is little lower. And then by October, November, you might see prices inching up. That's a normal cycle. Why? Because companies' year end is usually December. Companies at year end usually declare their financial results, what it is. More often than not, it's good and improved. Companies at year end, knowing a full understanding of the facts are concerning their financials, right, is in a position to declare how much dividend they can, declare from this final year financials. So because of that, now because results are more or less better and improved, usually companies all the time declare dividend. Companies who did not declare before will declare at least a year-end dividend. So you find out that going into January, February, March, the first quarter of every year is a heavy dividend declaration period. And this is why, right? And this is why January, February, March, the market generally, prices tend to move upward. So summer, right? So summer is usually tight. Okay, volume is low. Prices are declining leading up to May, June, July, August. By end of August, September, volume is still low, but you might see prices inching up on low volumes. Typically, that's a cycle. By late December, January, February, March, heavy volume, heavy trading, number of transactions, prices moving up, and heavy dividend declaration. Right?
Yeah.
I can tell you that on average, let me just give you an example. In a company like NCB, will usually declare up to about $4.85 billion raw cash as dividend that they distribute to their shareholders.
I know NCB shareholders are patiently waiting for that
They are
day.
patiently, and guess what? So far, the last interim report, the last financial reports they have seen will indicate to them that the sacrifice they made earlier this year when NCB suspended dividend payment, that it is bearing fruit. Because you saw the
Okay.
increase in results year-end September, even greater than the previous high. Okay? So 39, nearly $40 billion in profit as opposed to the previous high, about 21, 22 billion. So again, it's sacrifice and it bear fruit. The government and the economy is making that sacrifice now with BOJ increasing policy rate. Will bear the fruit later on. Recommendations. I know, yes, boy, I'm talking so much. What are the recommendations?
No, man, context is important.
Right,
Our,
right.
our, our community values context.
Exactly.
When we do these episodes, context is always what we started with. So that's
Great.
good. Context is
Great,
good.
great, wonderful. So going into next year, under normal circumstance, we'd expect the market to move up, generally speaking. What is interesting, though, there's an economist, American economist called, Sam Wilson. We know, these economic books, we only know them by the name of the author, the last name. So I can say Sam Wilson, right? I don't remember the name of the book or his first name. But just like Hansen and Harvey, yeah, anyone who did economics and thing, exactly. So Sam Wilson, he said that in times of inflation, every reckless fool can look like some great financier because inflation is driving prices. Right? So a company revalues its building and its property from $10 million to $20 million because of inflation. A company adds prices increase to the cost of the products that they are selling, right? But their efficiency ratio is lower because their cost is going up also. You see?
Yeah.
So it might look like they are doing well. The point I'm raising there is that during the market period, sometimes even bad stocks are pulled up. When there's a heavy movement of the market, prices upward, even bad stocks tend to do well. So generally, everybody's fairly well off during the first quarter of every year, right? Good.
Okay.
There's an exception now. Of course, policy rate, BOJ rate. What is policy rate? Is the base rate charge on BOJ overnight deposit with financial institutions. Financial institutions play a very significant role in the economy. At the end of the day, really and truly, every business, they need capital, they need money, they need resources. And it's the financial institutions you go to. Interestingly, businesses are now waking up to the market that they don't have to go to the bank and borrow. As a matter of fact, the bank is probably restricted and limited in how much it can lend you. But when you come to the market to get cash by giving up some of your shares, it's almost unlimited what you can get. In fact, we can tell you BOJ, Sajik Wisinko, a few years ago, came to the market for just under $5 billion. Might have been 2017, and they got applications
2017,
in excess of 21 billion. So they came to the market from the 5 billion, they got 21 billion. JMB 2019 raised about $23 billion in the market. That's the power of the stock market. Every mickle make a muckle. Could one financial institution lend them? That is highly unlikely. Whether they have the resources or regulatory. Good. So the market is good. What do I recommend? Let's start with PanJam and Jamaica Producers Group, because those two companies are merging, right? We were doing some analysis the other day, and there must be some reason why they are merging. There must be some benefit to both entities, right? They can produce greater value than the two separate entities. And of course, both has a lot of land, both are into logistics and movement of goods and services, One is heavily into property development and property management, which is PanJam, and one is into food processing, farming, and logistics, right? Good. So we can see some form of synergy there. What it will, they'll lay it out later to us. But let's start with Jamaica Producers Group. It is yes. Our recommendation, as that it was sometime summer, November 22, is a buy. We believe that this stock is good. Yes. This is Jamaica Producers Group by itself, okay? As a separate entity from PanJam, is a buy. Right? The cash flow is fairly heavy.
Do you have something you want to share, by the way? If not, it's okay now, just in case you have.
Right. I didn't prepare this to be shared, really.
All right,
next time, definitely. Okay,
all
next
right,
time,
continue.
definitely. Right. So we're looking at their financials, right? Their cash flow statement is quite, they're very cash rich, we should say. Right? Operations cash flow increased by 45%, which is to 5 billion Jamaican dollar in financial year 2021. So they have additional if they should need capital for any reason, if there should be some eventuality, we can talk about it, hurricane passing through, they'd have sufficient cash, to at least take care of the company. This is what cash and cash flow means. So they're fairly healthy. Their balance sheet is quite healthy. Their key ratios that we use to measure certain value is quite healthy. Their current ratio is 2.8 times. That is the current assets over the current liabilities. These are short-term obligations, so they have enough asset to cover that in case there's a sudden call on them to make payment. Okay, and quite a number of the metrics. Their solvency ratio, which is long-term, their balance sheet, their assets over their debt and their obligations, very healthy. So that is recommended as a buy, Jamaica Producers Group. PanJam, the last analysis we have here is a little while back. However, PanJam, COVID has affected everyone. PanJam has shown substantial recovery since. They recently opened the new ROK Hotel downtown.
Yes.
Right? Residence/hotel. Really, I went there once. Nice, beautiful place. And it seemed to be popular. Yes. Yeah. Now, interestingly, that has done well. And I think in the depth of COVID, I think this is perhaps one of the largest construction projects or renovation projects to have been completed and open, right? PanJam also is into the leisure industry. They're into Chukka. For example, they own Chukka Cove, Newcastle Company, Carib Hospitality Jamaica, right? They're into the outsource management company, yes? And quite a number of different business lines, but property being their main business line. And that is a recommended buy here, okay? So we have that as a start that we expect to do well. Interestingly, a little history on PanJam. At the turn of the pandemic, PanJam was trading for about 100 Jamaican dollars. We know then that they had indicated to the market that they wish to come to the market to get some additional capital meaning money. And we believe that they were going to come to the equity market. That is, they perhaps would have had an additional public offering, APO. That, again, was delayed, pandemic. The price has fallen up to about $55 now, from $100 to $55. Right? Yeah. We know the pandemic impacted them because they're into the leisure industry, etc. Right? And that impacted them. But subsequent to that, they have recovered significantly. Note also that PanJam owns 32. There's some cross ownership of some companies on the exchange. PanJam owns about 32%, roughly 31% of Sagicor investments. Each time Sagicor declares dividend, PanJam collects probably between $500 million to 600 plus. Sorry, not billion. 500 million, $500 million to about 600 plus $million in raw cash from Sagicor. Each year, Sagicor declares dividend. So you can see the whole flow of dividend and cash among companies or to the shareholders, and how it helps prices. So PanJam is also recommended as a buy. We are going to do some analysis to see what the merged entity will look like, what their financials will look like, and some further analysis to see how it may play out, right? But it's a healthy company, a combined balance sheet with assets over 100, probably about 115 billion Jamaican dollars. That is substantial. Also, to compete on the international market, you need size, and I think this will aid them also in being able to perhaps take on certain deals in foreign jurisdictions, for example, the US, right? As well as take on certain projects when they have a combined balance sheet, right? So that includes cash flow and assets. So these two companies look good, right? Another recommendation that's on the main market. Let's look at future energy source company, Fesco. Now, that company came public at what, $1? We know subsequent to that, it has done quite well. Very ingenious, the management. In their during the height of the pandemic, how they're able to drive revenue, right? And they were really very creative in their marketing. They also produce not just gas and gasoline and energy of that sort, motor vehicle largely, right? But they are going into the LPG or expanding in that era. They are also into the automotive accessories, for example, the oils, lubricants, etc. They are building that out. And of course, the shops that you have there, what do you call them, recreational shops that nearly every gas station has. They're also pushing that, as a revenue generating entity. And it has worked when you look at their financials. So our analyst here has this as a buy also. Okay. Even though the price has gone up significantly, I mean, from $1 to $5 something, that's about 400% increase. in the period that they're since they've been listed. However, and let me note also, these recommendations are considered long-term. That is, we're not saying in the next 2, 3 months or 4 months, the stock price is going to appreciate. Especially during this time, there's a little things are tempered in terms of what businesses can do because, again, their cost has gone up. So this means that even with that, these companies are recommended in the medium to long term, and usually in excess of a year or two, right, for prices to move. And this is how we should think, especially when we're constructing our portfolio. Absolutely necessary. So Fesco is a recommended buy. Okay, what we recommend here is overperform. Right? We looked at Jamaica producers. Yes.
Yes. So we looked at that before. So question before we move on from Fesco. I mean, what's your take in terms of how Fesco will fare in light of, pretty much there's going to be another listed company in the same industry in a few days. Any thoughts on that and how persons could possibly start looking at the two?
Okay, good question. Now, in terms of the broad market space in Jamaica here, that is the population, the potential demand for the products, there's no shortage. I think there's space for both to grow considerably. What is interesting, they are both in the energy. However, there's a slight differentiation now. Regency, the bulk of its revenue comes now from LPG, that is liquid petroleum gas that is used in the household. Fesco is largely from motor vehicle, machines, gas stations, vehicular energy, gas, petroleum, right? So they're slightly differentiated in that respect. Of course, Regency has 2 gas stations, so they're slowly moving into that area. And we know that Fesco is building on their LPG. There is space in the market space for both. There's a population that is underserved in nearly every area. So if these companies are properly managed, they can grow in the medium to long term. Now, that is in the general economy in terms of driving revenue in the long term. Now, in terms of how they might behave in the price in the stock market, of course, what it means, if you're looking from a portfolio basis, you're constructing a portfolio. JMB will manage several portfolios, pension fund, individual portfolio, and for different companies and entities, right? Now, we always tell people, one cocoa full basket. The one cocoa means it's diversified. So you have some in the energy sector, have some in the retail distributive sector, have some in the hotel and leisure sector, have some companies in the financial sector, have some companies in the manufacturing sector, and then you have some companies that are diversified in terms of income. Grace, at one point, much of Grace income, 98%, was generated in Jamaica. Now it's about 80%. Now there's an article just recently that within probably 5 years, I think, the article said that like 70% and less to be generated within Jamaica. What are they doing? They are growing, and they are growing outside of Jamaica. They're diversifying. So when situations hit Jamaica, at least those income sources abroad is generally stable. When the Jamaican dollar devalues, if they are earning substantial income in a market like the US, which is a hard currency, a global currency, reserve currency, right? If they're earning in that currency, it means that inflation in Jamaica or devaluation in Jamaica will not impact them as badly as it is when 90% of their revenue was generated from Jamaica, right? So diversification is good. The point is, though, is that these companies, Fesco and thing, within the portfolio, diversification is good. What it means is that right now, based on certain valuation metric, Regency at this time is a little bit cheaper than what Fesco is trading at now. It means then that you'd move a little bit of resource. We're looking at portfolio and how people would manage their portfolio. Within the portfolio, you have limited amount of money, right? And you can only put X amount of money in a portfolio at a particular point in time. So you have to make choices. The question is, right now, you'd put a little bit more in Regency because it is a little bit cheaper than Fesco right now. So what the market would have done at the IPO is to sell a little bit of their Fesco, right, and put that into Regency, which is in more or less the same sector, but Regency was a little bit cheaper coming to the market. Of course, once it comes to the market and the price starts to run away.
When you say cheaper coming to the market, what do you mean? I mean, Regency IPO at $1.
Okay,
Fesco
$1,
IPO
$1. Okay, good. Thank you for asking that question. Now, both of them came at a nominal value of $1. What do I mean by nominal value? When they take out the payment,
Fesco was 80 cents,
Fesco was 80. Oh, yes. A little bit cheaper, nominally cheaper. Okay, great, true, right. But Nominal dollar means you look at the paper, you see $1 written on it. Nominal
Yes.
$2 means you look at the paper, you see $2 written on it, right?
Mm-hmm.
But you ask yourself, what is the relative value? So the dollar
Yes.
that is nominal, $1. Yeah, you can buy quote unquote $1 worth of goods today. But tomorrow, because of inflation, you really can't buy $1 worth of goods tomorrow. So the
Okay.
nominal
Yeah.
value is still $1, but the relative value is less tomorrow. Because if you're
Okay.
gonna buy one loaf of bread today with the dollar, and tomorrow you can only buy 3/4, the relative value of the dollar has declined. So the
True.
nominal value is still $1, the relative. So let's look at the valuation now. You ask quickly. What we call earnings per share. Ultimately, what determines value is the earnings. If a company is not producing and generating profit, then we're going to sell it. Or eventually, if it keeps generating less and less and less profit, it's going to reach zero at some point.
Mm-hmm.
And then it may reach a point where they're eating out their reserves. So profit is important. Profit is what?
Yes.
Earnings per share, right? So we take the profit and we divide it by the number of shares, we get earnings per share. When you see the company publish that we made a profit of 95 cents per share, it is saying that the total profit of the company might be 100 million divided by 110 million stock units, you get probably 95 cents. My maths may not be so correct, but right? So that's what it means, earnings per share of 95 cents. When you're buying a stock, you look at the cost of the stock and you look at the earnings per share. P over E. I've heard that term before, right?
Yeah, man.
P over E. Price over the earnings per share. I can buy a stock for $10. I can buy a stock for $20. Now, sometimes some people say, oh, I'm going for the cheaper stock. Oh, we're going for the $10 stock over the $20 stock. Fine, that's nominally cheaper. But if the $20 stock has a profit of, let's say, $20,
Mm-hmm.
and the $10 stock has a profit of $1, look at it. 10 divided by 1. It's trading for $10 in the marketplace. It's earnings per share. It's profit per share. E. The price is 10 in the marketplace on the stock exchange. The E, earnings per share, the profit per share is $1. Right? The P divided by the 1, the PE ratio is 10. The company that is valued at $10, trading at $10 in the marketplace, that is in the stock exchange on the stock market, $20. Right? It generated profit per share of $10. 20 divided by 10 is 2.
Yeah.
So the company, so all of the things being equal, the lower the PE, the better the buy.
That is true.
Because you're paying $20 for a stock that generates $10 of profit, as opposed to paying $10 for a stock that generates $1 of profit. So all being equal, the lower the PE, the better the buy. So in this case now, at the point Regency published their financials, when we look at the price, it was coming public at $1 divided by the earnings per share as at the financial statement as at the time they were coming public. We got a PE, I think, of about 23 times, which means that it was trading 23 times. It was coming public at 23 times its earnings. So when you hear the jargon PE, and when you hear the jargon, like 10 times or 10 times its earnings, that's what they're referring to, right? So Regency came to the market at about 23 times its earnings. At the same time, Fesco was trading at about 33 times its earnings. Right? So it means that the price relative to the profit was better on a Regency at the point of opening the application than Fesco was. So in a case like that now, you're looking at a portfolio and you say, okay, I have some Fesco. They're in the same industry, almost similar. Slight differentiation, but similar. Maybe I should sell some of my Fesco. Because remember, in your basket is a diversified sector, right? You have stocks that are in different industries. So you want to lower your risk. Yeah. So you're looking at all the companies in your basket now that are related to Regency, all of them that are in the energy sector or related sector. And you say, okay, right now they're trading at a higher price, a higher PE than Regency. So maybe I should sell a little of them. Right. So you don't have to sell everything, because you still want that a little bit of it. It has potential for growth. But for the time being, you're going to sell some now with the intention of buying Regency. When Regency comes public now, and then a week or two, potentially, maybe, we see, just like other IPOs, we see it run up 30, 40, 50%. Then it might become far more expensive than Fesco. And that is the time to sell some of that and either buy back the Fesco or go into other cheaper stock.
Okay. Interesting perspective. Very interesting. And I never looked at it that way. I do agree that, so both companies are interesting to me. I think Regency does have some growth potential. I think they are positioned to grow. They do have the one gas station open, and they're going to have two open.
Exactly.
Mr. Williams said probably by the end of January. So then they'll have 3 gas stations to work with. So we do expect to see growth there. And it's interesting to see the next few reports because, I mean, PE, as you mentioned, is important. But, I tend to think about, how the company will grow and the kind of earnings they can continue to generate because price, as you said, fluctuates daily.
Yes.
So it's interesting. I do think Fesco still has more growing to go as well. I do think that it's going to be interesting to see how investors trade them both because I know that they're going to be heavy comparisons in terms of how one trade at one PE versus the other. So it's going to be very interesting. We never had this or never thought we'd have this direct comparison with a company like Fesco. So I think it'd be very interesting to see. I think at some point we may find them trading very closely together in terms of PE. Because the argument will be similarly to what you just said, which one is trading at, which one is overvalued versus which one is
undervalued, right?
Yeah. So I think that's going to be interesting. I don't think, I personally don't subscribe to low PE for growth companies, and both are growth companies. So I think the idea of an industry average may not be the best way to measure them in terms of PE, but we will see. I think the first 3 months will be very interesting for them both.
Right. Yes.
So thank you for that. I think that was very helpful for us to go through. All right. So I see some I see somebody asking what about Palace Amusement. We'll get there. I think we'll comment on them at closer to the end.
Yes.
All right. So what's next on your list, Clive? I think it's very interesting.
Yes. Right. Now, Carreras is always, quite a few is a good buy. Now, we know, there are some people who have an issue with it because, it is one of the sin products, yes. And Supreme Ventures also the sin product, yes.
Yeah, however, I can't touch those, so yeah.
Right, exactly. But I know in terms of cash flow, though, Carreras, the business model is really very interesting, They are not heavily laden with physical assets. So the costs associated with physical assets, including acquisitions, maintenance, and whatever regulatory fees, etc., they need to pay on that rent, etc., they're not burdened with that. So you find out that their cash flow is quite heavy. Also, there's something called, when they talk about cash crop, it's interesting, that term. I just really learned the definition like probably a year or two ago. I grew up hearing this word cash crop. I never really figured out what it was. And I just learned what it means, But the nature of their business, that everything is sold for cash, is not sold on credit. They sell to the retail man on the street, so they generate cash. And consistently, that is still, to date, the best dividend-paying stock. I mean, you can buy that stock, and in terms of dividend, you can recover the value within perhaps a few years, right? So that is a recommended buy on our listing here. Yes, we have, let me see. We have Massy Holdings, which is recently listed on our market here, right? That's a Trinidad. Its head office is domiciled in Trinidad. But note that Massy has been in Jamaica forever, from probably the 1950s. You probably buy Massy products and don't know, right? So it has been in Jamaica. You name it, insurance. IGL is a Massy company. Yes, that gas company that competes with our LPG, and they're in the medical industry also. I mean, that company is very diversified. That I can tell you, right? It is trading at some good metric here. And our Trinidad counterpart, JMB, has offices in Trinidad. You can open an account in Trinidad also, and they can trade both markets. Let me know. As well as what is interesting, the cross-listed securities, you can trade them in both markets too. We'll go into a little bit of that, what the cross-listed security is and the opportunities there are in terms of arbitrage between the two markets. Good.
Yeah, so, I think our viewers would benefit from understanding what that means. So definitely would appreciate that explanation.
Exactly. So our Trinidad counterparts, they sent us out their research report on their market, and they have Massy as a recommended buy. They say it is undervalued right now. It's trading at the PE is quite low. I mean, the PE is only at a point in time, right? So you don't say use a PE to say this company can grow or don't grow. No, we just use PE at a point in time to compare two companies that are quite similar. Okay, at a point in time. As I indicated, at the point of Regency coming public, you look at the PE of both companies that are in the same industry, quite similar, and you say, maybe I should put some cash, liquidate some and put some cash into the other. Of course, once
so who are we comparing Massy to in this case?
Well, okay. In this case, Massy is a conglomerate. We may be able to compare to a Grace. We may be able to compare to a Jamaica Producers Group. Grace, even though the financial sector, what word can I use there? But the division is growing and contributes significantly to their revenue, but Grace is in like 36, has about 36 different entities under its holding, and they are quite diversified. JP is into farming, food processing, value-added services, wharfage, you name it. So they are fairly diversified. Massy is in the same era. So I think they are comparative entities, right?
Okay.
Right. So and Massy operates in about 11 countries, right? To Latin America and North America, and I think it has business entities in Europe too, right? Yes. So it's really diversified geographically also in terms, or should I say currencies, right? So that is good. So that is recommended as a buy. It's fairly cheap, trading at a PE of 11.5 times. That is its price.
We've seen quite a decrease since the stock split here.
Yes.
You know, from in April, from like let's say 128, I think it was the day off, and then since then it's now trading at pretty much $80. So that's about 40. That's what 33%
decline.
From split. So with the two large sell orders here for about 400,000 units at $80.
Yes, and there's a reason for that price decline, and it's more what we call technical versus fundamental. Fundamental, looking at the financials, we're looking at the real things that drives productivity and value within the company. That's That's fundamental. When we talk about fundamental analysis, so we look at the financial statements. When we talk about technical now, it's about how the market performs and how the market value the stock. Not its real intrinsic value based on the financials, but how the market values it. What is interesting with Massy? It was in 2021, April 2021. Yeah, the directors announced that they're going to cross list. I think it was trading at about 66 TT dollars then.
Yeah,
about that. Yes. They announced that they were going to cross list in Jamaica. Now they announced that I think it's about April 2021, and they didn't do it until what? Early January.
Yes.
2022. Yeah. Now, during that time space, all persons in Trinidad who had accounts in Trinidad, could be Jamaicans too who have equity accounting at JMB Trinidad, right? All of those persons were buying up the stock. So the price at the point of announcement of the cross listing, Trinis began to buy up the stock up to about 100 plus TT dollars. I think it's about 105 TT dollars, nearly 106 TT dollars, from 60 something dollars, at the end of April.
So what you're saying is it would have seen a fair amount of appreciation after the split announcement. So that's the correction we are seeing.
Before. You see, they announced in April that they were going to cross list. The marketing TT quickly ran and started to buy up the stock right up to a price of 106 TT dollars. It came to Jamaica when it was cross-listed in Jamaica now. 7-8 months later, it was cross-listed at the price it was trading at in Trinidad, 106 TT dollars.
Yeah.
Suppose they had announced it in April and did it the same time in April. It probably would have been cross-listed in Jamaica at a price of roughly 60 something where it was trading at in Trinidad in April. So they waited 7-8 months. By then, the market in Trinidad naturally, sensibly, logically was triggered to buy up the stock because it's going to be listed in Jamaica and there's no volume in Jamaica. No, Jamaican investors are going to want it. It's a healthy company. So they started to buy up the stock. The point is though, by the time it was cross-listed in Jamaica, they didn't even bring volume if they had brought shares to Jamaica and sold it in the marketplace. But by the time it was cross-listed in Jamaica, there was such a demand for it in Jamaica that the Trinis easily made a killing. So they transferred those shares from the TTCSD to the JCSD, from Trinidad to Jamaica, and sold it in Jamaica. So they inundated our market, this local market, with volume. And
Yeah.
that is what caused the price to decline. You see? Now, of course, when the stock split was had now, they continued to sell same way. And that caused the fact is that our marketplace was inundated with people who bought it. And what is interesting, if you bought the stock in April at $66, let's say $66 in April, huh? And then it was listed at $106 in another market, you can easily, when you come to this new market to sell, you can dump that stock right back down to $66, right down back to break even without suffering a loss. You see? So that is exactly what has happened. So I think that is what significantly contributed to the decline in the price of Massy on the Jamaican market. You see? Because the company fundamentals right along the way has always done well, consistently every quarter. So it's a technical factor that caused the price to decline, to fall off in Jamaica. Largely.
Interesting. Thank you for that. Thank you for that. I think a lot of our community members are happy for that explanation, because a few of them, I think, would have purchased Massy right before the cross listing and would have been expecting for things to go in the opposite direction. So that clarity is helpful.
Mm-hmm.
All right. What's next? So I figure we can go through one more of your recommendations, and then we can maybe look at the companies that are being mentioned in the chat so we can give our community members a chance to hear what we may think of their companies.
Yes, and I may have about 20 minutes, right?
Yeah, man, cool.
Okay, fine. So yes, okay. So so those are, so Massy is still a recommended buy. We have a few companies that I believe are fairly buy. Our research team is fairly conservative, and I think research usually is conservative by nature, right? Because really they're about mitigating risk, right? And they also do their recommendation based on a long-term holding. It's normal, it's natural, and it's the right thing to do, right? So there are a few other companies that we believe has good potential values. Now, what I'll do is to kind of guide your team and your viewers through a process, right? Right. So rather than point out specific stock, I can give them some information that can allow them now to look at opportunities. Now, let me do a quick check of the indices. On December 2019, COVID came in, 2020, stoppage, slowdown in globally, asset value fell. Asset meaning things that are owned, including financial assets, including stock market assets, investment, fell. Now, let me just quote some figures here. January 2019, by December 2022, as a matter of fact, let me just quickly quote. January 2019, between January 2019 and December 2020, our market, the indices which represent the individual securities on our market, fell on average about 24%, up to between December 2019, when COVID globally was just recognized, and by December 2020, 1 year later. By 2021, the market was still on average down, probably about 23%. Okay. All the indices on our market. By December 2022, right, the market on average is down from December 2019, 19 to 20 to 21 to 2022. That's probably about 2 year span, right? Up to December, today's value I'm using, right? Between December 2019 and 2022, today, the market is down, generally the indices, on average of probably about 11 to 12%. So there has been some recovery, right? From a decline of 25%, 24, 22, 23% in 2020 to about 25% in 2021 to now an average of 12%, 11, 12%. Now, there has been some recovery, but it means that the market still has not fully recovered from 2019. So what you investors should do now, look at that and see which stock prices are still down over this period of time. However, their results have shown increased profitability between 2019 and December 2019 to December 2022.
Okay, and, interesting.
Right, and just say to yourself, there may be some value here that the market is ignoring. There's a reason why the market is ignoring it. The market is not foolish collectively. But what it means is that it may be time for you now to come in and buy. Now you might say, oh, I don't want to buy, and the stock price remain flat. Well, because we can't perfectly predict the market to come in incrementally. That is, rather than coming, whatever investable funds you have, divide it up into tranche, perhaps 4 or 5 tranches, And then each tranche, you're going to buy X number of securities. And this is how you come in incrementally to reduce it, to lower your average cost. That's one.
Yeah.
Remember, stocks you owned in 2019 would have declined on average as of today by probably 11-12%. So you want to reduce the average cost by buying some more of those securities that you believe has a good chance of recovery to reduce the average cost. So if you bought a stock at $10 2019, it lost a quarter of a percent in 2021, 25% at 75 cents. It has regained some value. It's probably at about 85, 90 cents now. Well, you want to buy some more to reduce the average cost. The average cost would probably be about $1 that you bought it at 2019. So do that. So look at the portfolio, look at those stock prices that have declined significantly, and you look at the results for those stock prices. That is the quarterly report subsequent to that. Have they improved? Do you look at the Gleaner, search the Gleaner online observer for news and information on this company? Are there positive news written on this company? And then you say, okay, maybe this is a buy. But again, get complete information from your advisor. Okay, yeah. Good. That's one thing. Mm-hmm. Two, diversify. Well, first, we tell you about diversification. Why? Many times during all economic situation that every economy goes through, there's always a sector that benefits.
Yeah.
So globally now, during the logistics COVID time, what benefited? We know that there are areas like the people who deliver goods, food delivery. Not sure if there's any company listed that is in that area of business wholly or sufficiently.
Not yet.
Right, but that did well. We know everything related to safety, health, hygiene did exceptionally well. So an MDS would have done well. Medical disposable and supplies would have done well during the pandemic period, right? So you look at diversification because every time one era when economic crisis hit, the era that does poorly, there's a contrary era that does very well. So find those opposites. This is why we say diversify. That's one. Defensive stocks. There are areas that does well during all economic period, all economic cycles. For example, during COVID, we know initially the whole logistics issue because the whole country was shut down. People couldn't move, including trucks. We saw on TV people couldn't sell chicken and eggs. Yeah, we saw. But guess what? That quickly recovered. By year end, by summer, by 9 months, September 2020, all the retail, food distribution, merchandising companies did well. You name them: Seprod, Grace, L.E.A.R.N Trading, Last Day. All of them did exceptionally well. These are what they call defensive company. They do well. So look for the defensive company. That are those companies and areas and business segments that no matter what economic cycles we are going through, our country is going through, those areas will hold steady. Okay? Good.
Yeah, man.
Look now also look for dividend stock because you want cash flow. When the prices decline, you want to ensure that this company is paying your cash. At least you're getting some return from these. So look again at companies that has good dividend cash flows and cash and dividend yields. Okay? And diversify your portfolio. So all of these areas you can look at and put a little bit of them in a portfolio. That's another thing.
Okay.
Good.
Yeah, I wrote them in the chat so persons can see them. So
exactly.
Thanks for that.
And then also this area that is ignored in our marketplace right now, all property related stocks and securities. I have for example, let me see if I can say this thing. Let me see if I can magnify this and so I can refer to it.
I mean, if you're talking like the real estate stocks.
Right, real estate, exactly. So we have the Cygnus, we have the Kingston Properties, we have the 138 Student Living, we have KP REIT, we have Stanley Motors. All these are property-related companies. Those in the very long term are expected to grow. And I think the market has not awoken to them. Many of them are trading below their intrinsic value. What do I mean by intrinsic value? We have the financials, fundamentals, the balance sheet, the real numbers that we crunch, and we say this is the value. Then we compare it to the market value. It is trading on the market, and generally, it is trading on the market at a much cheaper price than what the financial statement says it should be trading at. So they're trading below the intrinsic value. So you look at those also. The big concern is, though, if I go into this, my money might stay there and not grow. That is a possibility. So what do you do to mitigate against
that? Is literally the concern that many persons have.
Exactly. So this is why we have to, one, again, we'll go back to the safety net which is diversification. That's one. And two, I said, okay, and incrementally buy, right? Don't just come in with one swoop, right? Whatever investable funds you have, divide it up into tranches. And let's say every quarter, every 3 months, or every 6 months, you come in and you buy this select number of stocks.
Okay.
And that helps you to mitigate risk. And again, the mindset, think long term. Do not use IPOs as a gauge of how the general market should perform, right? It is very unusual. Several things have caused our market, especially IPOs, to move the way it has, right? And I think it is temporary. I think in a few years' time, several reasons, more companies are going to come onto the market, which is competing for the investable dollars in your pocket. That's one. Two, the market, I think, is going to wake up that, hey, if a company's if the person who's carrying a company public value the company at $1 as at this point in time and list it within 2 weeks' time, business didn't grow by 500%, profit didn't
Thank
grow
you.
by 500%.
Thank
No,
you
it
for
didn't.
that point.
It didn't.
Thank you for that
So why am I
point.
paying 500% more for a stock that just come public? You have to ask yourself that question, right? So be
Thank you very
muted,
much for that.
right? Be mitigate. So hold yourself stir. When you buy a stock at IPO, two things I should do. As soon as the price run up, you can decide I'm going to hold it for the long term. So I'm cool. No matter how much the price run up, I'm cool, right? Or you can say when the price run up and it is significantly overvalued at that point in time, you can sell some, lock in some of your gains, get a little cash flow for other opportunities, and leave some for the long term.
Okay, I like that. Cool. So Shanique is asking if you have a mentorship program or if you do webinars. I think she's getting a lot of
Well,
gems
your
from what
show.
you're saying.
Well,
So
if she keep tuning into your show, she'll see more of me.
there you go. There you
Yes,
go.
certainly.
Exactly.
And
All
next time
right.
I'll come
So
with some slides and
yeah,
some.
man, no
Yeah.
problem, man. So thank you for that. So what we can do, I think persons here have gotten a lot of value from what you've shared. So if you missed it, I'll just share the timestamps after the video with all the companies that Clive would have mentioned. So if you want to watch a replay and see a specific pick, then you can go through that. What I'll do now, Clive, is kind of touch on the companies that they're talking about in the chat, and we can just share briefly our thoughts on it as we go through, because we're gonna wrap up in about 25 minutes here. All right.
Okay. Yes.
So George Stone is asking about Usinko. What are our thoughts on Usinko?
Okay, let me see if I can pull up. Well, okay. Usinko is a good stock. I can speak broadly of it. Let me pull up some of the valuation metric that I have here. I like to use that just as a basis when I talk. But Usinko, I think, is a good stock. Let me see what our research people have said about it. But I have too many things open up on my desktop now. Right. It is a good stock. Here's what Usinko has done. It's a diversified company. It largely is food, retail, merchandising, and distribution. Largely that. But it now has some of its own brand. For example, water and Crown Water and thing. It has developed these brands. Very highly successful brand. In fact, I think at one point, it might have been a show on TV, investment show. And they said that the water brand has been one of the major revenue generating areas. Interestingly, just recently too, it might have been earlier this year with the ministry pushing healthy food and pushing right for schools, that they have signed a contract to now manufacture juice for the school system. That is another major revenue potential area, right? That is considered a defensive stock also. That in the latter part of 2020, post little bit within the pandemic, but on the tail end, they are ones who produce also exceptionally good results, right? And they pay dividend consistently. Let me see if I can find some of the valuation metric here, but I consider that a stock to have in your portfolio, certainly, right?
Can't disagree with you on that one. It's a company that I full disclosure, I'd be a shareholder of that company, so
yes.
I have a lot of love for them in terms of what they do.
Exactly. And the valuation metric is showing it as an okay stock, a stock that you should have in a portfolio. The P is 19 times, which is the market average is about 24, 25 times. But this is not bad. What is interesting about PE, though, I want to note, right? as you rightly said, that there are other things you need to look at apart from PE. PE is only at a very point in time when you're comparing similar entities. For example, at this point in time, should I move some money from this and put into that area, into that company?
Yeah.
That's right. But going forward, you have to look at other things. And what is interesting, though, is that sometimes you can have companies that has great, significant potential for growth. You can have them trading at a high PE. Why? Because the market has so much confidence. Remember, P is P, price, over earnings per share.
Yeah.
Individual stock price per stock unit over the profit per stock unit, right? I remember, if the market has such confidence in this company that it will grow, has a potential for growth, even though the earnings, the profit per share is constant, right? People will move the price up constantly.
Yeah.
Therefore, as the price, the P is growing and the E remains flat, the PE overall is growing and very high. So a high PE doesn't necessarily mean it's a bad stock. First, you look at the PE and then you look behind it.
Yeah, yeah. I'll just say, I think so. Two companies that are definitely on my watch list is Main Event, because with everywhere I go now, there's I went to an event on Sunday. I saw a main event show headed to the same event, and a lot of those have been happening, especially in the Christmas season. And one thing I always see at every event that I attend is water. So the same thing that we're just talking about in terms of Wisynco. I think as more public and corporate events take place, as the hotels go back to normal, as the schools go back to normal, I think Wisynco is positioned to do well. So
yes,
it's one of those that will definitely probably be in my portfolio for a little bit. So
yes, I expect recovery. Yes, I expect recovery because they were hit hard. I mean, understandably, the nature of the industry, so they were hit really hard, and we expect they're still on the recovery. So it is a stock that you can consider as the economy opens up, and movement begins again. Right?
Well, I think can't we say that movement is pretty much back to normal?
I think so. Yes, I think so. I mean, traffic is back there. You're quite right. Yes. You see? And what is interesting to the diversification, we think of them as playing at parties. No, they are at every convention. They are doing weddings. I've seen a few weddings that they have done. Right? You name everything that requires, and they also lease and rent equipment.
Yeah.
And also technical expertise. You see? So they are really fairly diversified, even though they're in the entertainment and leisure industry. Within that area, they have diversified their revenue streams and they continue to. So there's potential for that.
Yeah, agreed. All right, so next company, Fontana was mentioned by Claudette. Any thoughts on Fontana?
Yes. Well, Fontana has done exceptionally well. Again, that's also is considered a defensive company. Retail pharmaceutical. On the tail end of the pandemic, they did very well, but their growth was fantastic. Their model, I find it to be quite interesting. Just anecdotally, that is visually, the one on Waterloo Road, how they made it to enter that massive area, you have to pass through their store. The massive door that leads in, on one side is their store. And excellent. I've never seen that. Well, I've not seen that before. Perhaps it's not new, but that's for me, right? That's one. But they are growing, and they have indicated. Let me see if I can find their metric here. That is some of the valuation metric. But they have indicated that they are opening new branches and new shopping areas, and that has been a major driver for them over the last since being listed. Right? They have also, if they have size, they can expand the type of, what should I say, products and services that they offer. And they have shown diversified streams of income sources. So it's not just selling what we usually see in a pharmacy, but they're really, and I'll do some more research on that to say exactly where, but I do know that they have expanded their reach in terms of their outlets, and they plan to open, I think it's about 3 more outlets. One in Portmore, also like a super center in Portmore, which should augur well for them, because that's
and I think they're coming up. The quarter that they're in right now is going to be their best quarter, right?
Yes, should be.
That's
Based on
the Christmas
projected
season
revenues. Yes.
Yeah, man. So I definitely think I think that's definitely one to keep an eye on. All right, next one up is, well, we spoke about Massy already, so Miles, hopefully you would have gotten some value from that discussion. Cheesy Gully side, we mentioned Fontana. What about Mailpac? I think Mailpac would have had quite a year in terms of just
Yes, Mailpac. Okay, they have done well. They have still have quite. I think there's potential for growth. What I realized though, I remember having a discussion with a few team members, right? And I told them that there really is no significant competition, even though there are a lot of these new type of entities opening up that offers online shopping and bringing goods in for you.
in terms of no competition for Mailpac.
There is competition, but it is not substantial enough. The service delivery is not there, right? The facilities for ease of shopping is not there, right? So Mailpac still leads way ahead. And I think, in other words, what I'm trying to say is that Mailpac is still way ahead in that new burgeoning industry. Right? And I think there's capacity for growth in terms of service, in terms of reach. They have centers, right? As well as they have online shopping where they offer you credit card facility and online shopping. They have also formed, what should I say, technical agreement with Aeropost that does their delivery and transportation logistics, and other air centers in the US that retails goods. So they're really getting deeper. I should say they're adding value to their service rather than simply the mailing of orders and the processing of mail order goods and services. Just
So
recently,
you don't think all of those smaller shipping companies taking away market share slowly from Mailpac? Because I mean, maybe by themselves, the rocket ship, the can't remember the other names right now. You don't think those little smaller ones maybe together slowly taking away market share, at least from the core business for Mailpac? I know Mailpac does like services on the corporate side as well that maybe accounts for
some of it's
um,
and
they have multiple streams of revenue,
yes,
right? So,
and this is
but
what I
in terms
speak
of
to.
core business,
Right,
yeah.
and this is what I speak to. They have an agreement. They have some joint venture with DHL, one of the major global carriers. There's FedEx, there's DHL, and a few others. Those two are the largest globally. They have an agreement with DHL Jamaica. That's one. Two, storage as well as processing. Right, that's one. Two, corporate Jamaica. I do not see any other company that can get the type of business from corporate Jamaica. Corporate Jamaica, a business is a business. There are ways and means of doing executing a transaction. And Mailpac right now seem to have the management system in place, the logistics, yes, in place, to really satisfy a business entity. And this is why I think they kind of have that niche. I would say fairly a lot. That's one. I think where there's some competition and the quality of service, anecdotally, I can speak to, I've not seen any data, but I can say anecdotally, that is from my experience and feedback I've received from a lot of people. The others, their service quality is not up to scratch. They're either shut, they're closed. There's some issue just recently, a few months ago, on the public media, about several of them that people could not get their money, their goods from for some reason.
Well, I thought that was a general problem though.
Well, to the best of my knowledge, I'm not saying it might have been with the smaller entities. Maybe many of them do their shipping through one unit that had, was giving one logistics entity that was giving trouble, right? But Mailpac, I think, has established reputable routes. That's one. Where I think there's a challenge though with Mailpac, maybe cost on the retail end. Individual persons who buy goods online, the cost I've heard, and this is only anecdotal because I don't have data of this industry and this sector to refer to, that on the retail side, the cost, I've heard complaints of the cost. You see? But interestingly, myself and other people, they said that the facility, the comfort of clients when you go to do business with them, that is important. I've heard people say that they can't move from them. Not no, at least not now.
Okay.
You see?
Okay.
So
I got you.
so their fundamental looks okay. Their PE is about 21, 22. It's fairly priced, you know. So I think this is a longer term buy. I think it has potential for growth. It's a longer term buy. That is if you
Well, I
purchase
mean,
this.
they've gone down 50% at least from their high of about $4 at the
Yes.
start of
That,
2021. So they're trading at about $2 now. I know there was notice of the breach earlier this year that investors weren't
yes.
very happy about based on what we would have seen.
Yes.
And I think so. I think what happened with them based on when they launched and the pandemic, the start of the pandemic being so good for them, I think that kind of set unrealistic expectations, at least
The rest
for
going forward.
2021 into 2022 for them. That's what I think happened in terms of their
Yes.
price. Because remember, they came out and then the pandemic happened. They had the
Right.
partnership with PriceSmart. They had
Yes.
really great revenues, etc. for that year. But then I think persons kind of expected them to do the same in 2021, and that's not what happened. So we would
Right.
have seen a correction in price from
Yes.
there. They are a good dividend paying stock. Um, so yeah, I just thought I'd mention that. So I do agree that because it's seen such a fair amount of correction, there could be opportunity.
There could be
Um,
opportunities, yes. And
yeah.
at this times like this, look at the quality of management. How creative are they? You know, I don't think they should have any problem with capital if they look to expand or diversify, but the quality
Mhm.
of management. And I think they are fairly creative in looking at different avenues of driving revenue. Right. So I'm relying on management to pull the company through.
Yeah, man. So we're hopefully going to be meeting with Kyrie Robinson in January to hear a little bit more about their
Good.
plans.
Good.
So let's see. We have time for maybe two more companies because I think you'll have to go soon, right, Clive?
Yes. Yes. Within
Yeah,
few
man. So
minutes.
let's take two more and then we'll release you. I think I'm a little biased with this one, guys. Forgive me. TransJamaica, I say Elaine and
Yes.
Canada,
Yes.
Canada Immigration Campus asking about TransJamaica.
Yes.
Any thoughts on them?
Certainly. I think that's a good buy. Their dividend yield is exceptionally well. I mean, they indicated that in their prospectus, and they have maintained it, which is interesting and very good. Confidence in the company is important, and they have maintained their dividend payout since that dividend policy since they came public. That's one. It is still fairly cheap, but there's potential for
I
good growth.
fully agree. Fully
Yes.
agree.
In fact, we know again, pandemic hit them. We have seen, I think they said that traffic is now at back to about 90 something percent pre-pandemic level. That's one. We saw two rounds of increase in uh, in toll rates since the pandemic. Eh? So we've seen substantial recovery in revenue. Um, what we're aware of now is that there's a second leg being built now. I believe that that will be under their management also. That connects Clarendon Park, I believe it is, somewhere in Clarendon to Porus, right?
Mhm.
Yes, that's another revenue generating area. This is unique. This this particular company, it's really road and infrastructure. So you have to look at what is
Yeah.
happening on that road to determine its revenue, how its revenue flow will be structured. That new part that is being built from Clarendon Park to Porus, that should be another revenue generating source for them. They have also indicated, but that should be completed, I believe, by the end of 2023. Right? What I don't know is it being built by JIO, Jamaica Infrastructure Operators, which right now has a contract for every physical activity on that road, that is cleaning, repairing, etc.
Okay.
Or is it being built by them and final? With that, I need to look at the financials to determine. But it will be under their management, and I expect them to collect toll and revenue from that. Right. So that's one area. They have
I
indicated that.
know, I know. So I haven't looked at them in a while. I know that there was something that came out recently. I'm actually trying to find it now about I think
The
it was a
acquisition of JIO.
news article. Yes, yes,
Yes,
yes.
yes, exactly. Now, JIO is the entity that does the physical work on the. It's interesting. I look back at their prospect just since we were analyzing it within our internal meeting. NROC offered TransJamaica shares to the public. And then but there's a separate entity, JIO, Jamaica Infrastructure Operators, that based on a reading I saw, they do all the physical work. They do the repair, the cleaning, the repainting, additional ramps, etc. They deal with that. So TransJamaica pays them a management fee for all this activity. By buying out that entity, it means that everything concerning the highway will now be under the jurisdiction of TransJamaica.
Okay.
Of TransJamaica, right? So that's a potential revenue stream for them, right? So they are buying out that. So that's a potential revenue stream. That is, or I could say a save in cost in terms of management fees.
Yeah, man. Yeah, man. That's what the article is saying.
Exactly. So TransJamaica is slated to do well because one, expanded traffic. And what is interesting about the nature of that business, that fixed asset called that highway, that road, can ramp up revenue simply by traffic flow. They don't have to build additional physical facility, right? That's interesting about the nature of that business. So they're going to build additional ramps, entry and exit ramps onto that highway, which again can potentially ramp up revenue, right?
Yeah.
As well as we know that new leg being built, right? So that stock looks good for growth in terms of revenue, and I believe it has some value for the investing public.
Yeah, man, I agree. I take it that you have to go now. That's why your phone is ringing.
Yes.
Okay. Thank you so much. I think we've gotten some good value from this discussion. I'll leave. Is there any way that persons can contact you? I don't know if you want to leave maybe an email or something if persons want to reach out to you. Or do they reach out to JMB directly?
They reach JMB, and once you are with a rep or an advisor, they will then contact me if there's anything that need,
Okay.
discussion.
All right, cool. Thank you so much.
You're welcome, man. God,
Right.
I'm happy to be on the program, and thank you and your viewers for having me.
Yeah, man, thank you. We'll definitely speak again soon.
Good. Take care, brother.
All right, cool.
All right, thank you. Good. Take care.
All right, guys, I hope you found value from that discussion with Clive. So what I'll do, we have a few minutes left. I'll take some more. I'll try to look at some more of the companies that were mentioned. You heard what Clive said about TJH. I've been talking about them for a while. I think you guys kind of see, the obvious value there as well. It's one to watch. All right, so let me try and get through as many questions as I can. Ask your questions in the chat, and I'll try to get to as many as I can in the next few minutes. So Dan is asking, what are dividend stocks? A dividend stock is pretty much a stock that pays a dividend to its shareholders. It's considered a dividend stock really when it pays a dividend consistently. So if it pays it one-off or a special dividend, we wouldn't consider it a dividend stock per se. So it's really the ones that may pay it on a consistent basis, whether every quarter, twice per year, once per year, etc. So like, for example, TransJamaica that we're talking about pays a dividend really once per year, okay? Hopefully that helps. We also have a video on dividend investing. So if you want to learn all about dividend investing, how to understand the dividend announcement, check out our YouTube channel for that video, okay? So as Irene is saying, very good company, they pivot well. I guess you're talking about Wisynco. Hopefully that's the one you're talking about. I do agree with that. Okay. Junior is saying that you love to see more dividend content. Well, I mean, let me know. So here's the thing. We have a good friend of ours that was featured at our conference, Demetrius Fairman, who does excellent dividend content. So I usually leave that to him. But if you'd like to see us cover dividend topics, just let us know what you'd want us to cover, and I'll consider it going forward. All right, let's see. So Cygnus, we did a stock review for Cygnus recently. Canada immigration. Indies, we haven't looked at them in a while, so I may check them out. So let's talk about one, right? Because I think a lot of persons have been concerned about one in terms of how the stock price has been since it's listed. So here's the truth about one, guys. There's nothing for us to assess because we haven't had any more information about the company since they have listed, right? So what we have to work with is the prospectus and what we expect. Now, I think we're gonna see the report from them early January. So that's what we're gonna see. Any new information, I guess that's when we'll see it. I do note if you look in the queue now on the buy side, there's an order here for 823,000, another one for 526,000 units at $1.20. As you notice, it's gotten significantly lower from 235 shortly after it opened. So I think some investors would be considering it a buying opportunity now, especially at these prices. So look at those orders, and that will tell you just what some persons may be thinking of, right? So we just have to wait on one, right? Wait for some more information, and then we can make a fair assessment of the company. We don't have enough information to do that right now. We know the plans that they had in terms of the prospectus, but we haven't seen or heard anything since. So that's what we're waiting for. In terms of Fostrich, we would have done the interview with their CEO. Check that out on our channel, please. I think they're shaping up to have a good year next year. So they would have been investing in the development of that, I think that super center type complex. So that is one I think we may see closer to the end of 2023 going into 2024. I think there was news of them breaking ground recently. So that company recently had their stock split, and I think has been trading as high as, let me see, I think it traded as high as, I'm seeing here, maybe about 440s thereabout. Let me check money line here. So for those who are wondering why the big drop, let me actually do this. This is a stock split, okay? So don't worry that the price went from what seems to be 33 here all the way down to $3. That would have been the stock split. So that short run up to over $5. That's normal after a stock split. Then it would have kind of corrected down to about $3.38, almost $3, I think. Now it's back up to close to $4. So those who would have gotten an opportunity there. There is talk of the rights issue as well, Orville, that I have not seen or heard anything about. So I need to check in with the CEO and say what's happening there. But there was talk of raising additional funds. So I think that might have been delayed. So we're expecting to hear something about that, right? So let's see what else I have here. Let me try and answer the more portfolio type questions since we only have a few minutes left. Aline is asking, how many stocks is too much or too little for your portfolio to be considered diversified? We did a video on this as well. Look for a video called How Many Stocks Should I Own? Where I answer that question in depth. What I would say, if you're a brand new investor, I wouldn't recommend having more than 4 to 6 companies in your portfolio, especially if you have low capital. The more money you have spread out against more companies, the lower your monetary return is going to be. If you have a smaller number of stocks and you can own more volume in them, so if they should appreciate, you have a higher monetary gain in terms of that return, right? Because if you have 1,000 units of a stock and that stock goes up, 300-400%, that $1,000, it's not going to give you a lot in terms of return, unless of course it's a company like maybe Palace Amusement or GK, but those companies aren't known to grow that well, that high, that quickly, right? So it's important to understand that if you have a small amount of capital or you're a beginner, small number of stocks is recommended. As you become more skillful or maybe your capital grows, then you can look to increase that number. But my recommendation would be 4 to 6 for beginners, when you reach into the realm of like 15 to 20, you definitely would be better off probably owning a unit trust or equity fund might be better, when you reach those levels, right? So hopefully that helps you, Elaine. Let me see if there are any other questions here. Good dividend stocks then. I think I'd wait maybe until the end of this year to see the listing on which stocks would have performed the best in terms of dividend. I know Mailpac comes to mind, TransJamaica comes to mind, Sterling Investments come to mind in terms of good dividend paying companies. Of course, you want to look at the dividend yield before you purchase a company for dividends. So the yield is very important to look at when calculating that. Okay. Glennis, hopefully I'm pronouncing that right. When is the trading day for RPL? I'll be this Thursday. So it should list this Thursday, which means you should see it probably on JTrader tomorrow. So look out for that. That means you can start placing your orders and be sure to understand how the circuit breaker works so that you can place your orders correctly. Okay. Thoughts on carb cement? I think this is the last one I'll address here. I mean, carb cement has been, let me see here. I haven't looked at them in a while. They were in my portfolio. They're no longer there. So I haven't looked at the company personally in a little while. So, I mean, as we understand, sentiment would have been kind of, impacted for the company when the royalty was announced earlier. That would have seen major sell-off. The company would have traded as high as I think $140 something earlier this year or last year, and it's now trading right below $60. So that's a really, really significant fall. I suspect that they will continue to perform well in terms of their numbers, and that over time investors' sentiment towards a company may improve. And so they may start to recover. I really think that's one of those industries that if real estate does well, it's likely that carb cement will do well, because they provide the raw material for the companies in terms of what they would need to build, right? So hopefully that helps you. I do want to just remind everyone that this episode is sponsored by JMB Moneyline. That's a platform that I've been using here. So if you want, one of the things I like about Moneyline that I'll just share with you here, if you check out this last trades, it shows you the exact time and the volume that was traded. This resets at the end of the day. That's the only thing about it. So you have to check it daily because I can't go back and see the last trades for other days. But I thought this is a pretty cool feature that they have. As you see here, you just search for the company and it shows you the high level summary here. So it's definitely worth checking out. The link is in the description of this video. This was a stock market recap sponsored by JMB Moneyline. So definitely worth checking out their platform. If you're not a JMB customer, you can always feel free to reach out to them. So thank you guys so much for being here. I hope this was a valuable session for you. If it was, please like the video. Share this channel with new investors, with persons who are interested in learning about the stock market. We have a great number of new content coming your way next year. A lot of announcements are coming. I want to thank every one of you who joined us for the conference, and I know that we got great reviews about that. If you have not caught the conference or you want to watch the replay, if you registered, the link was sent to your email. If you did not get to register, it was sent to our mailing list. So if you're a subscriber to our mailing list, then you'd have a link to the video as well. So feel free to join our mailing list because all of our announcements will go to our mailing list first. Before it even hits social media, it goes to our mailing list. And we have, as I said, just some great content coming your way next year. I want to thank you all for being here. And I will see you in our very next video. Enjoy your holidays and we'll see you soon.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N. Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
And follow us on all social media platforms at Learn, Grow, Invest.